One thing that analysts and investors are focusing a lot on are your margins. You see the third quarter gross margin slightly lower sequentially. I want to ask about margin management in a slow growth world. Do you have the latitude to keep lowering costs and protecting margins?
Yeah, hi. Thanks for having me. So, you've seen we've delivered a solid set of numbers in more challenging markets. And indeed, we've been able to improve our gross margin by 20 basis points year over year to 20%. And that is mainly driven using our value-based pricing. So, in fact, we are using more data, more insights into labor markets to price for scarce profiles.
The day. I want you to make the economic world come alive for me. I look at your geography, North America, France, Netherlands, Germany. We're talking about recession in Germany, slowdown in the Netherlands. Give me your take on the state of the global economy.
Yeah, I'm more than happy to doing that. So whilst indeed we see a slowing down of Europe, so we have a 4% decline in there, we are really enjoying the benefit of a very good global portfolio. So North America indeed stable with excellent profitability. So we put 1% on the board there. Rest of the world, double-digit growth with amazing numbers. Latin America, 28% growth. India 19, Japan 9%. Also with good profit, good margin picture in there. What we see is of the minus 1.7% top line, we have more than half is automotive related, and that is a weakness we see in some of our bigger countries coming through, like in the Netherlands, obviously Germany and in Belgium. But overall, really happy with the global portfolio we're having to compensate some of that.
Yes, and Henry, when then do you expect to see a rebound in Germany? Do you still expect not to see a rebound before September? Just give us an update on Germany.
Yeah, we've seen Germany actually going slightly deeper in Q2 with minus 15. You might have picked that up. Predominantly driven by automotive, but also overall manufacturing. We do not see any relief soon in there, at least for the remainder of the year. We do plan a weakness to continue in there, and we plan our cost base accordingly.
Henry, how do you balance that perhaps slowdown, beginnings of a slowdown? Do you invest more in Monster? Do you invest more in Vettery, which is obviously the technology proposition for you, or do you look for merger and acquisition, bolt on?
Yeah, we do both, and indeed it's really important in times like that we make smart investment decisions. So we definitely invest more in the US where we have good profitability and see that room for investment and growth opportunities in there, but also in many other markets, also like in Japan and in Latin America, where we see good profitability in there. And yes, indeed, we are actually tightening the belt in markets where it's a little bit tougher at the moment. But overall, it's really important that we do smart investment decisions to balance it out, and that is what we did in Q2.
Henry, your smaller staffing peer Page Group recently had a profit warning based on slowing global growth. Hays has seen its fees growth fall. Are you going to be able to protect yourself from the difficulties of that magnitude faced by Page Group and Hays?
Julia.
We're happy what we've achieved in Q2 as far as profitability is concerned. You're seeing gross margin improving, and we've been able to put it through to the EBITDA line, but also we had positive cash for the first time for many years in Q2, and we intend to achieve the same going forward.